Howdy, Jacob here. Today we're looking at Coterra Energy in the oil, gas, consumable fuels industry. 19.8 billion market cap on 20.6 billion enterprise value. Humongous growth recently. We see that the last 2 years, 135% year-over-year revenue growth, and then 162%. So crazy growth. Their gross margin doubled over the last 10 years from 39.8% to 84.4%, and their operating margin is now higher than what their gross margin was. So that's crazy to see. Return on invested capital in the most recent year is 27%, but in the last 5 years, it's probably upper or lower double digits, so still impressive. Let's look at this balance sheet. 673 million cash on hand, no short-term debt, 2.1 billion long-term debt. Okay, let's look at the cash flow statement. Actually, a devastation in 2021 of $1 billion, so that's interesting. Your use of cash historically has been pretty heavy on share repurchases, but recently is really a good amount of payments to their dividend. So more recently, maybe 50% payout to the dividend, 50% common stock, or 40-40, and then 20% miscellaneous through debt, purchasing down debt or acquiring companies or such. They haven't really made an acquisition since 2018. It was just a 9 million 2020, and I guess this is net, so they could have made acquisitions and just sold off more. But okay, interesting use of cash here. Let's start making some assumptions. So on the revenue growth side, I'm just not going to know what to do since it's really all over the place. I'll probably assume 3% revenue growth, 13p in price to free cash flow. Maybe 15p price to free cash flow, saying that if they find things to invest in, maybe they'll get a fantastic return. But otherwise, margins, let's do more of an average here. Let's do 25, 20, maybe 3% share change. 3% on 20 billion, you're looking at 600 million. Yeah, that sounds about right. And then dividend payout, I'll probably stick with what it is right now. I don't see a reason to really bump it up. I think that is fine. So use of cash, a little bit of dividend, a little bit of share purchases, leaving over a little bit to reinvest back into yourself. I'm saying low percent growth here just because I feel like there's something I might be missing with this revenue jumping up so much. So maybe it'll slow down a bit or go negative for a year or two and then get back to more consistent growth. But with these assumptions, we're looking like it needs to fall 25% before you get the return that we're looking for. It's a pretty volatile company. I definitely want to do more research on this before getting it because I just want to understand it a bit more than I do right now and understand why it can decrease. Revenue can go down 40% and then up 100% within a couple of years. Just interesting. The seasonality is just crazy, or the volatility is crazy. So hopefully you enjoyed the video and have a great rest of your day. Thank you.